That was not hot coffee. It's supposed to heat up my coffee. All right, so the car insurance industry has changed so much in the last several years. I wanted to make another video to kind of recap what are the coverages that are optional for you. When you're purchasing insurance, what do you have to purchase? And what can you purchase? And what are the parts to stay away from? Essentially, the easiest way to think about car insurance is coverage for you, coverage for others, and coverage for your vehicle. Now keep in mind, each state's different, and we'll go over a little bit of those details, explain some of the ins and outs of those. So the coverage for you is the main part. That's if you were to get injured in an accident or you were to damage your car. Now we need to determine who's the one at fault or not at fault. If I back up into my garage, am I covered? Versus if somebody hits me, am I covered? The coverage for you is going to be either something called MedPay or personal injury protection. States like Michigan have personal injury protection. States like Texas have both personal injury protection and or MedPay, which neither of them are required. Other states don't require you to have any medical, so you don't have to necessarily even carry medical if you don't want it. A lot of people have their own medical, and it can get a little bit complicated, which if you're in different states, we'll link some videos here that might help you, because sometimes you can do coordinated and there's all these different pieces of the medical portion. But essentially, you've got the MedPay or the bodily injury. Now, the main piece that you're gonna see for the medical portion is not just the MedPay, what we mentioned. There's also something called uninsured motorist. Uninsured motorist is you protecting yourself if somebody out there is driving without insurance. It's actually becoming more and more common as the prices of insurance go up. People are getting quoted thousands of dollars per month just to have a car, and it's not worth it. So they're still driving, just not insured. Yeah, it's illegal, but they just don't care. It just has to be what it has to be. They got to get to work. And so if that person injures you, sure, you could sue them. That's fine. That's availability. But if they don't make any money or they go bankrupt, now you don't get anything. Now you're not covered at all unless you have your own medical. That's where the uninsured motorist kicks in, and that's called bodily injury. So uninsured bodily injury, it's usually at least $25,000 per person, $50,000 per accident. In most states, most people will carry either $100,000 per person or $250,000 per person. There's also uninsured property damage, which kind of falls in the coverage for your vehicle, but it's still coverage for you. So the uninsured property damage, if they damage any of your property, it could be a laptop that you have, it could be your car, anything of your property that they've damaged and they don't have insurance, you're self-insuring your policy so that if that happens, you still have some coverage. The second piece is underinsured motorist. That's bodily injury and property damage, same scenarios. That underinsured is for those people that can legally drive or want to legally drive, but they can't afford the higher coverage. So they carry the state minimums. If they carry state minimums and they hit you and injure you, same scenario, you can go sue them, but they might not have the money. So now insurance offers an ability to have underinsured motorist coverage. So if you have higher limits and they carry lower limits, it'll cover the difference up to the limits that you have. Essentially, if they get in the accident and theirs doesn't cover it, yours kicks in, as long as it doesn't max out above the limits that you set. Same amount of limits, usually 100, 300, or 250,000 a person, 500,000 per accident. That's the coverage for you. Coverage for others is the exact opposite. It's the bodily injury, but it's your coverage that you're carrying in case you injure somebody. Now you get to choose whether I can afford the state minimums or can I afford a better coverage. Keep in mind, you can't just walk away from a policy or can't walk away from a claim and just say, nah, I don't have any money, that's too bad, so sad. They will deduct your wages for years and years to come. So if you have plans to have a good income and have a good lifestyle, then you may want to carry a little bit higher than the state minimums, if not a lot higher depending on the cost. This is where it differs from state to state. The bodily injury in Michigan is super inexpensive compared to bodily injury in Texas. In Texas, because that's the main claim, or Illinois, because that's a main claim, the liability limits there are going to cost you probably 2 to 3 times as much as Michigan. Because Michigan requires that you carry medical, so they've already got medical as part of the policy. You're technically already paying for it either way. States that don't require that medical, now you've got to pay a little extra to protect yourself. So that's the main coverage, is the bodily injury. If I injure you, my insurance will pay X amount per person, X amount per accident if there's multiple people injured in that vehicle. There's also a better coverage for those that have a little bit higher net worth. So you can do what's called a combined single limit, a CSL coverage. That's for those that don't want to split it up. I'll give you an example. Bodily injury that I carry is $250,000 per person, $500,000 per accident. That's if I hurt someone. But if I damage their car, I carry $100,000 for property damage. That means if I hit a nice car, if it's 110,000, guess what? I owe $10,000 in that claim. It's very unlikely. That's why I carry the 100,000. I actually might have bumped it up. But if you do what's called the combined single limit, that means just one number. Let's just say I do $1 million coverage. That $1 million coverage can be less expensive if you're adding other policies to it. So having different liability umbrellas and things like that, it lowers the risks over here. So for those of you that have a higher net worth, it makes sense to do that single line coverage. The benefit to that is now instead of me saying $250 per person, $500 per accident. So if someone gets injured at 300,000, I owe 50,000. Well, if I do that combined single limit of $1 million or even $500,000, it maxes out at that limit. Doesn't matter how many people are involved, what kind of cars are damaged. If I don't go over the $1 million, it's just a covered scenario, assuming that it was a covered incident. I know that got complicated, so 9 times out of 10, 95% of the time, you're gonna do the split limit. That's the $250,000 per person, $500,000 per accident. That's the most common. The second most common is $100,000 per person, $300,000 per accident, and then either scenario, $100,000 for property damage. And that's the coverage for others as well. So you're also covering their car at that $100,000 or $50,000 or more if you want to have the right coverage for that. The third one is coverage for your vehicle. A lot of states require that you carry your own collision. So if somebody hits you, most of the time their insurance is going to pay your deductible. If there's no deductible, then they would pay your car. But if you're the one that causes the accident, you want to be protected for your car. It was my fault. I was negligent or I made a mistake and I hit somebody. Now you're carrying collision on your car to cover that actual vehicle if it's a covered incident. Commonly, you're going to see a deductible. A lot of people do 500. Some people do lower or higher. It does affect the price varying in states and locations. So talk to your agent about that to find out exactly what that pricing plays a factor. By the way, if you are shopping for new car insurance, I'll put a link in the description below where you guys can work with the local independent agent. Most of those are going to be able to shop multiple companies and get the final mix of what coverage you should be carrying to what cost you should get. So if you're looking for the best rates for the best companies, I'll put that link in the description below. Now, Mark, you didn't mention comprehensive because that's a piece. There is another part. So you've got the collision and you've got comprehensive. I know I said it backwards, but so what? So comprehensive is usually what sits above the collision on the paperwork. If you're looking at the paperwork, other than collision is another name for it. What that covers is theft, vandalism, if you hit an animal, if someone stole the car, things like that is your comprehensive. We call them acts of God, essentially something you had no control over. You're not driving the car, it's just sitting there. A tree falls on it, whatever that scenario is, falls under that category. Comprehensive is commonly less expensive because there's usually less damage. A lot of times it's a scratch. Someone opened the door and the wind blew it into your car and now you've got a dent. A lot of people carry lower deductibles on those because they're not as expensive. So those are the main pieces. You've got the coverage for you, coverage for others, coverage for your vehicle, and then you've got the additional pieces. The most common things that people want to have on their policy is gap insurance. I've recently switched my mindset on that because I usually just said, go buy it from the dealership if you're buying a car. But the more I quote it and the more I've been able to sell it to people, it's way cheaper if you buy it through your car insurance. The only caveat is most of the gap insurances require the car to be less than 3 years old. So if your car's older, you may not be able to purchase the gap insurance if that's available. I'll link a video at the end that goes over the gap insurance into detail, but essentially what it is, if you owe $10,000 or whatever your loan is, and the car is worth less than that, it pays the difference, so you don't owe money if your car's totaled out. Towing and road service. Depends on where you live. If you have a lot of towing claims in your area, then it's going to be expensive. But 9 times out of 10, it's $3 a month. It can be $20 a month, but it's usually cheap. You can go buy your own road service through AAA. You can buy your own through Verizon. You can buy it through any cell phone carrier. So towing and road service isn't that big of a thing. If you have a better deal outside of your insurance, I would always go to that company. Because having your towing inside of your policy is great to have, and I have mine, so I'm lying to you because I do it the same way. But if I was smart enough, don't listen to me, I'm an idiot. If I was smart enough, then I would have gotten a AAA membership, or I would have just called my Sprint provider and said, hey guys, I want to buy road service and towing through you. And it's usually through Allstate. And it's cheaper, but when I have a claim, if I file it through my car insurance, they count the number of claims I have. If I file a road service or towing claim through an app or through a program, they don't count those. So If you are prone to those, you need to go outside of that. If you're not, then either way is fine. I don't care if it's cold, it's still coffee. I love my coffee. The last add-ons are something that a lot of companies do. Progressive does something called a savings deductible bank. It's like the Gap, but essentially you pay more, but they put it in a savings account. That way, if you have a claim, then you've already got money for the deductible. Kind of a neat little idea. I actually like that idea. But then you also can do vanishing deductibles, depending on the package that you buy with a company. That's why these insurance agents are so sought after, because they can figure out all these packages that give you these deals. But if you buy the right package, like for example, mine is a package, and I get cash back every 6 months I don't have a claim. I also get vanishing deductibles, so every time I don't file an at-fault claim, my deductible goes down $100 every 6 months. I'm actually close to having it down to zero, so if I do have a claim, that's great. Another thing, a part of that package, which you can buy separate with some companies, is you have claims-free renewals. So when you have claims-free renewals, you get more discounts for not having claims. On top of that, you can also add onto your policy with some companies is accident forgiveness, and that's a big one. For those of you that have young drivers, having accident forgiveness, you just don't know. You're just throwing the dice at the casino. And if they have an accident and it's their fault, you don't want your rate to go up 30%. I'll actually link a video at the end here that goes over those exact amounts. So how much would a ticket cost you? How much would a DUI cost you? Things like that. And the last piece is rental car coverage. If you get in an accident and it's a covered claim, then you would want a rental car if it's your only vehicle or transportation. Otherwise, you're gonna out-pocket that $50 to $100 to rent a car every day. Most insurances will cover the rental, which we explained in a different video. That's subscribe. There's a lot of videos that are helpful here. So knowing that is an available coverage that you can purchase. It tends to be a little bit mediocre cost-wise. Commonly, I see it about $10 a month to have that extra coverage. It just depends on the location that you're in. So what are the next steps? You're really gonna wanna find out a couple different things. One is if you do need the gap insurance. So if you have a newer car, I'll put the gap insurance video right here. You can check that out. If you're wanting to understand a little bit more of that riskier type of policy, if you do have an accident, if you do have a ticket, what is the cost and how much is that going to affect? Is it 15% or higher? I'll link the video that goes into depth, very detailed there, that goes over the cost. Otherwise, let me know what your thoughts are. If I missed one, put it in the comments below. I'm Mark with Think Insurance. I'll see you in the next one.